Good day, learners. In this lesson, I will commence with one of the most important adjustments in grade 12 accounting, and that relates to the capitalization of interest on loan. Now, this was set as adjustment number 8 in the NSC November 2022 Paper 1 Question 1.3. So let's have a look at the information that is given for this adjustment. We are given in the trial balance the comparative figures for the loan account. So your balance on the 28th of February 2021 was 1,280,750, and the closing balance on the 28th of February was 1,159,000. Right, let's have a look at the information that is given. All transactions with respect to the loan were recorded. Interest of 142,250 Rand on the loan is capitalized. Capitalized means that when you make a monthly repayment, not only are you paying back the interest on loan, but you are paying back a portion of the loan. Bullet number 3, a fixed installment including interest, very important to note, including interest, was paid in full. And bullet number 4, the capital portion of the repayments will increase by 10% over the next financial year. Now, the best way to explain capitalization of interest on loan is to look at the ledger account. Right, remember, loan is a liability account, and in a liability account, you show the balance on the credit side. Okay, so opening balance carried down 1,280,750. The interest, which we can record immediately, remember the double entry for interest on loan is debit interest on loan and credit loan. Right, and then the closing balance for the loan account is given as 1,159,000 Rand. Now, you notice something, that the monthly payment is not given to us. That we need to work out. We need to work out by balancing the loan account. So let's balance the loan account. On the credit side, 1,280,750 plus 142,250 would give us a total of 1,423,000. Now we will take that total, transfer it to the left-hand side. You have 1,423,000. Now we need to work out the monthly repayments. And if you look at the monthly repayments in total, it's going to be 1,423,000 minus 1,159,000, and that gives you the total repayment for the year of 264,000. Okay, and your double entry for that, of course, will be debit loan and credit bank. Okay, important to note, learners, is that the 264,000, which represents your total repayments of the year, can be split between the interest portion and the portion of the loan. So we need to split those two amounts, which I'm going to show you in the next slide. So the current portion of loan, which is going to be payable in the next financial year, you'll work it out as follows. 264,000, which is your total repayments for the year, minus your interest. Remember, that is included in the monthly repayments, and that should give you the total repayment portion towards the loan for the year as 121,750. So just to reiterate, the 142,000 which is part of the total repayment of the year, included in the total repayment, and the portion of the loan which is included in the total repayment is 121,750. And please note, they give us another piece of information. They tell us that in the next financial year, the portion towards the loan repayment will be 121,750 is going to increase by 10%. And that is going to be 133,925. Remember, learners, we need to remove this from the non-current liabilities and show it as current portion of loan in note number 9 below current liability. Right, just to recap on the capitalization of interest on loan and how we split the amount. The monthly repayments, learners, is 264,000, which we had to work out when we balance the loan account. And that can be split as follows. 142,250 is your interest on loan, and the difference between 264,000 and 142,250 is your payment towards your loan for the year, which is 121,750. Okay, right. So in your balance sheet, your loan under non-current liabilities is going to be 1,159,000. Remember the balance at the end of the year, minus what you are going to pay towards the loan with the increase of 10%. Remember, this now becomes your current portion of loan, which again you are going to show under current liabilities as current portion of loan. And of course, your loan amount under non-current liabilities will now be 1,025,075. Let us now proceed to adjustment number 9, which deals with dividends and shares. Okay, in the information given in the trial balance is dividends on ordinary shares, that is your interim dividend. Remember, you pay dividends. The dividends you have to pay twice a year. The interim dividend is after 6 months, which you have to pay. And the final dividend at the end of the year, you will recommend. You will not pay the amount, but you will only pay it in the following financial year. So what is given to us in the trial balance? This represents your interim dividend. Dividends on ordinary shares as per trial balance is 207,000. Right. What other information is given with regard to dividends? On the 28th of February, there were 1,150,000 shares in issue, and a final dividend was declared on the 28th of February 2022. And your total dividends for the year amounts to 345,000. Learners, this figure is given to us. Right, so your total dividends is made up of, remember, that we were given the total dividend as 345,000. The interim dividend was given to us as 207,000. Therefore, the final dividend will now be 138,000. Let us now proceed to the final adjustment number 10. And interestingly enough, they've given us an adjustment for net asset value per share. They say, after taking into account all adjustments, the net asset value per share was correctly calculated as 675 cents per share. Now, why have they given us this information. Now, if you look at the number of shares that are given to us, which is 1,150,000 at the end of the year, and they gave us the net asset value per share. Learners, why have they given us this information? Because in the next part of the question, 1.3.2, we were required to calculate the ordinary shareholders' equity. So that's the reason why they gave us adjustment number 10 and they give us the net asset value per share. So in order to calculate the ordinary shareholders' equity, we need to take the net asset value per share, multiply it by the number of shares at the end of the year, and that should give us the figure that is required for the balance sheet, which is 762,500. Thank you. I will see you in the next lesson.